Welcome to the Money Watch Show. It's Tuesday, November 12th, exactly 1 week out from Election Day. So a lot has happened, and we are happy to talk to you about it. I am your co-host, Jill Schlesinger, CBS News business analyst, and I'm joined by my co-host, Mark Talercio, executive producer of Everything Jill on Money, as well as a certified financial planner in his own right. Hello, Mark.
Hello, Jill.
I love that. Hey, Mark, so much has happened in the last week. So we now know that we will have a second Trump administration. Markets surged last week. It's completely like just blowing the top off, right?
It's only going to go one direction for the next 4 years.
Probably, exactly. He's saying that being very, very sarcastic, okay? The S&P 500, the NASDAQ, the Dow surging to record territory. And, you know, what's very interesting is some folks were saying to me, like, you know, part of this was just people were scared that there was going to be uncertainty after the election, that there might be bad things that happen. And so that part of the surge may have been a bit of a relief rally. But you know what? There is a lot to come. We thought what might be smart here is for us to play a segment that we aired right after the election last week on CBS Mornings. And this is with me and co-anchors Tony DeCopel and Adriana Diaz. And we're talking a little bit about the market surge, about the Fed meeting that was coming up. And then on the other side of the segment, Mark and I will talk about that Fed meeting and what we think really could happen going forward. So, Mark, let's cue that segment from CBS Mornings.
Jill, we're going to get to the Fed, but before we do, stock market rose off of the election outcome. What do you think was behind that?
It was a pretty sizable move, by the way. You know, 2.5% to 3.5% or so for each of the major indexes, the Dow, the S&P 500, and the NASDAQ Composite. And, you know, if you really want to boil it down, I think it's two issues. One comes down to taxes and the other is regulation. What a lot of people don't realize is we had Trump tax cuts that took effect in the beginning of 2018. But to make the numbers work, they had to say to the Congressional Budget Office, we're going to sunset individual tax rates, meaning we're going to leave them in place until the end of 2025. But at the end of 2025, they go back to where they were in 2017. And there's been a lot of concern that all of those tax rates that were cut would rise under a Harris administration. Now that you've got Trump reelected, we now know that a lot of those Trump tax cuts that we thought were going to go up, they're probably going to get enshrined for another 4 years. So low taxes is a big benefit when you're looking at investments. The other part of it is regulatory. When you have tight regulations for, say, the banking sector or oil and gas, it curtails profits for those companies. If you have a lighter regulatory touch, well, then profits for those companies could go up. So yesterday we saw the banking sector, all the different banking stocks, 10, 11, 12%. If you hate
They're
banks,
all happy.
They're so happy. They're like,
Right.
thanks for that win.
Right.
So I think those two things together brought stocks higher.
So that's the short term, though. Could this be weakening for the economy or for the banking sector in the long term or medium?
I mean, look, we don't know what's going to happen. And I think that the other side of the Trump proposals that people are not really focusing on right now are those tariffs.
The tariffs, exactly. Which economists say is going to be bad for our economy, or what do you think?
Well, I mean, look, we don't know what they're going to be. We don't know how other countries are going to respond. If I look back historically, tariffs are generally not good for economies. Why? Because it sort of like raises prices for all those imported goods. And so if the tariffs are applied sort of clumsily, they can lead to higher prices. And I think that would shock American consumers, especially now that goods inflation has really gone down. As much as we complain about stuff that prices being higher, the trend is pretty good. If all of a sudden next year we get big tariffs, and at the end of next year we're talking about how dishwashers and the solar panels and electronics, that things cost more, people are going to freak. So we don't know what those tariffs will be, but it could really lead to a higher inflationary environment next year.
Interest rates, what's the Fed going to do?
Well, the Fed's going to probably lower interest rates by 1/4 percentage point. They have one more meeting left in December. And I think that it's probable that they could lower rates again by 1/4 percentage point. But here's the key. If we do get those tariffs next year, this was a point of contention between the Fed chair, Jerome Powell, and then President Trump in 2018. Powell said, hey, tariffs, they're inflationary. We want to keep rates higher. Trump really put him to task on that. Powell kind of capitulated, cut rates in 2018. The president has been very critical of the Federal Reserve. I think what people are looking for is, well, what happens to Jerome Powell? Will he remain the Fed chair under a second Trump administration? He's got the job until May of 2026. So we'll see. But I think the Fed is on track to lower interest rates, maybe again in December. We'll see how the economy reacts. If the economy's on fire and inflation stays high, Fed is going to leave rates higher for longer.
Okay, so Mark, after that segment aired, of course, the Fed did cut interest rates by 1/4 percentage point to 4.5 to 4.75%. Pretty much expected. What do you think is the pathway for another 1/4 point in December? You think that's like a foregone conclusion?
2 weeks ago, I said yes. Now I'm not as confident, but I still think it will probably happen.
I think you're like most of the investment community, because a lot of the investment community feels the same way you do. Like, not so sure because listen, the economy's still growing. Let's see how these next couple of jobs reports come out and what data points come out. I think we get 1/4 percentage point. I think they'd like to kind of get that in. Now, next year, that's a whole different question, because a few things that we should point out, and that is that a lot of the Trump proposed platform has a real tilt towards growth, meaning that cutting individual tax rates and enshrining the tax cuts from 2017 or pushing them out even further, that could be a very pro-growth stance. And growth can often lead to inflation, as can tariffs. Now, the prospect for tariffs is really something that we should take seriously. I so many people have said to me, he's not going to do it. He's not going to do it. He's not going to do it. I don't know about that, because he said across the board tariffs up to like 20%, then 60% for China. So it could be something, it could be like a real impact. And tariffs, when you put a tax on an imported good, the person who receives that good has to make a decision. Am I going to pass the cost on to the consumer or not? And if they do, that's inflation. Okay. And that's real. And so I think that we would have to say that the likelihood of next year having some burgeoning inflation come back on the horizon is certainly a possibility. And Mark, if that were to happen, that means we get high growth, high inflation, and means the Fed could go a lot slower in lowering interest rates next year, right?
Just what I want to hear. The word tariffs has definitely spooked some listeners. We have received quite a few emails over the past few days, basically saying, "What should I do? Should I go to all cash?"
Oh, wait, I wouldn't go all cash.
No.
I really wouldn't. I mean, tariffs would just mean that you have higher inflation. It could mean even slower growth. I have these guys at Capital Economics who send me all their information. It's so interesting. They're basically saying, look, the world's going to grow still next year because, as we have talked about on this program, the economy is doing very well. Okay. And I know people hate hearing me say that, but it really is. I'm sorry if people don't like growth, but it is growing. And so the idea that some of these policies could be inflationary would just kind of shave growth down a bit. I mean, if you look back to the tariffs of 2018, that's what happened. We had lower growth than you might have expected. So in that respect, I don't think this changes your investment focus. I think what this does is it keeps you really bound to your specific asset allocation. You don't have to pick the top and you don't have to pick the bottom. You just have to do what you do to get you to the goal that you're trying to attain.
And you have to be aware of your time frame too.
Exactly. That is so smart. Right. Because if you're talking about, I'm retiring in 4 days, maybe I'd have a little extra cash on hand. Maybe I wouldn't have, I might be, but I'm thinking that if you're retiring in 4 days, you probably have 3 decades of retirement ahead of you. I thought the most exciting thing that happened in the Federal Reserve Chair Powell's press conference was the very pointed question. Mark, you play Powell and I'll play the journalist who asked the question. Okay?
Mm-hmm.
Here we go. Federal Reserve Chair, if the president-elect were to ask you to resign your position as Fed chair before your term ends in May of 2026, would you?
No.
That's what he said.
One word.
One word. And I thought he was kind of, he put a stake down, didn't he?
Yeah, kind of drew a line in the sand. Yeah.
Yeah. Good luck with that. Anyway, Powell concludes his term in May of 2026 as the chair. He then goes and is just a Federal Reserve Board member until 2028. And that's when President-elect Trump could replace him. I don't know who he'd replace him with. We're going to have a lot more information, but you've got Chairman Powell for a while. And you also have a lot of conjecture about what's going to happen in markets. And you know what we don't know? We don't know any of the details. Okay? And so please, I really want to just stress, stick to your game plan. And if you have a question and you're worried about something and you're feeling like the world's coming to an end and I have to go to cash, can you please get in touch with us? Go to jillonmoney.com. Click that contact us button. Write us a note, please. We really want to hold your hand. No sudden decisions around this. Please, please, please. While you're on the website, sign up for the free weekly newsletter. Check out our YouTube show, Jill on Money, powered by The Compound. Subscribe to Jill on Money Live. Spend those $35. Yeah, I'll tell you what you should do right now. Spend that $35 now because Mark's jacking the fee up for our quarterly live webinars. So $35.
Slapping a tariff on it.
Yeah, Mark's the Jill on Money tariffs are coming very shortly. So check that all out at jillonmoney.com. Mark Talercio is our co-host, executive producer, and king of all things web. We are distributed by Paramount Global. We drop our episodes on Tuesdays and Thursdays. Please leave us a rating and review wherever you listen. And we'd like to ask you to please do something nice for someone else today. Change your work, change your wealth, change your life. Thank you for listening, and we'll talk to you on Thursday.
Paramount Podcasts.